Today is going to focus on trading psychology. First of all, we're going to be talking about the secret to success and then general trading guidelines. We'll follow that up by learning from experience and working through stages of development, taking you from an amateur trader to a professional. What are the steps that will get you there, and how do you deal with losses? To succeed, you really need to have a great understanding of what it means to deal with ups and downs regularly. What does it mean? Many traders out there think that having a great technical ability will ensure they are able to define a good entry and exit point. In reality, that's only a small percentage of what a successful trader goes through. Secondly, it is important we will take a look at financial management, as it accounts for a portion of your success as well. In short, technical entry and financial management have minimal influence on one's success. What really makes a difference is a strong psychological ability. Usually, it accounts for the majority of the effort that goes into trading. It's not always about the technical ability of being able to analyze technical points in a chart, or the entry or exit, or managing the money. The psychological aspect of trading is what's crucial. However, most traders primarily focus on technical abilities. The big part of being a trader is being able to handle trading and the pressure on the market. Common human psychology flaws when trading really break down into three common denominators. Despite new information arising, traders change their views really slowly. They often sit there and dwell on it. As a result, they act too slowly to make a difference when trading. We credit ourselves a lot of times with success, but we blame failures on events or external factors. Many traders out there have excessive self-confidence and tend to overhype their abilities, especially when starting out. They often think that they're better than the markets, but they haven't really figured it out yet. They assume they really know what they're doing. However, that's not the case. Again, you may have a slight edge on the market, but you'll never figure the market out. You'll never really be able to answer the questions of why something happened. You have to psychologically be able to handle yourself when you're trading. A loss resulting from correct behavior is not really that painful. It's just simply the lack of luck. And realistically, lack of luck is also just an inseparable part of day trading. It's just part of what we do. It happens to everyone, everywhere around us. We have all had it happen, where we got into a stock and it didn't end up going the way we thought. Let's move on and talk about general trading guidelines. In general, how do you go into a trade? What exactly do you need to do when you're getting into that trade? And what do you look for while trading? The answer is, the trend is your friend. And you've heard this through many books that you've read, and many people that you talk to when you're day trading. You have to be able to follow the trend of the stock in order to be able to follow the trend of the market. When the market is trending up and the stock is trending up, you don't want to be shorting the stock. You want to be riding the trend higher, riding the stock higher, and that's called trading with a trend. Secondly, you have to enter at a clearly defined technical level. So again, we talked about this in earlier lessons, where you're looking at those breakouts, those breakdowns, and those reversals that have clearly defined technical levels that you're going to be trading around. Also, the most important part is exiting losing stocks at your stop loss, identifying where you're taking your profit, where your entry is, and also defining that stop loss on each and every trade, and adhering to that stop loss is very important. We want to teach you to be able to trigger your stop loss and get out of the stock without losing your account. And we don't want you to also cut yourself off short and exit the winning stocks too quickly. That's why we suggest taking partials along the way. Remember what we talked about in several charts back? That first target price is where you come out of a certain percentage of your trade. It's all up to you. Your comfort level is imperative. We don't want you to be getting in over your head by taking trades with too many shares, causing you to panic in that trade. We want you to be cool, calm, and collected during trading. And the way you do that is to make sure that your share size is manageable. Also, you should avoid trading during the first and last minutes of the day. Having your day cleaned up well in advance of that closing bell at 4 o'clock is a vital part of your routine. Furthermore, we should also be trading, not at the very first candle or that first minute or second of the day. We want to have the market breathe a little bit. You should take a look at the market and understand the direction or the trend of the market before you're placing any trades. Taking what the market gives you on a day-to-day basis instead of forcing targets is something to be learned and implemented. Plus, don't trade according to your P&L. I often train traders across the globe by telling them to take their P&L and hide it, because the more that they're fixed on what their profit and loss are, the less that they're going to be focused on the chart and the technicalities of trading. Now, how to learn from your experience. How do you get better and progress up the ladder to become a better trader? Well, one of the ways to do this is by journaling your trades. And doing this is very important to do on a day-to-day basis. Having your journal with trades helps you learn from your mistakes as well as from your wins. You have to learn theory and put it into practice to reinforce the learning. Lastly, the most important thing and the biggest key there is your discipline or your thought process during that trade. Why did you take that trade? Sure, you may have had the entry, the exit, and the stock, but I want to know why the trade was taken and what the intention and feeling behind it was. Those are the keys when reviewing my trades regularly. To determine the error of each trade, we have to look at those and see if any reoccurring things are happening, and make a conscious attempt to take those things out of our trading repertoire. It is important that you get familiar with your hatred of loss and accept it. Turn it into the driving force behind your learning and trade journaling. Now, let's transition and talk about the stages of development between an amateur to a professional trader. These stages of development are broken down into a few categories. When you're an amateur, when you're just starting out, you most likely want to get rich quick. You see many traders on social media, or traders that you may know doing a great job every day. Well, I'm here to tell you these professionals have done this over a long period of time. It's just like mastering to fly an airplane. You can't read a book on flying an airplane, get behind the stick, and all of a sudden take off, and you're a great pilot. It just doesn't happen that way. When you're trading, it's all about screen time. The more screen time you have, the more practice you have. The more times that you're out there journaling your trades, the better you're going to be over time. Focusing on the correct way is the correct practice of trading that will lead to long-term success. Professionals are not afraid of risk. They're trading the proper stocks, and they know how to manage and contain what they're doing. Professional traders also view the market as a game of probabilities, understanding that not every trade is going to be a positive experience. But we know how to manage the feelings behind winning trades and losing trades because it's all part of the business. The objective is long-term survival. It's about not taking on too much risk at once, so that you'll be here tomorrow, the next day, the next week, the next month, and the next year. It's all about survival. The second objective really is consistency and accumulation of capital. With a consistent accumulation of capital, you'll work up that percentage over time. Those profits will compound, and you'll be seeing the light at the end of the tunnel over time. And the third and last objective is making high profits. So not only do you have to survive, not only do you have to be consistent, but you also need to be making high profits over time. We talk all the time about how positive traders win, but what happens when you have a loss? What happens when you have a losing day? This is going to happen, and these are the most common ways that traders lose. Not entering a trade at a valid technical level and ignoring technical entries and exits, profit losses, and the real stop losses is one way that you can lose. That's one of the common ways that you can lose by ignoring those key points. Secondly, ignoring the charts and the technical patterns. When you see a chart, whether it's the entry or exit, a breakdown or a breakout, you ignore those things, going rogue, and start pushing the button. Also, trading through boredom or overtrading is another common way to go in the downward direction. When you're bored, go do something else, such as working out, eating, or doing something else other than trading. Often, when you're bored, you might be clicking that button, putting on more trades than you need to, and that's a solid sign to lose a trade. We don't want you to be in that situation. Instead, we want you to make money from the market, pull it out, and end your day. Also, exiting the trade too early can be harmful as well for your long-term trading success. Again, that's why we have profit targets established. When you get into the trade, as we spoke about before, you're looking at a stop loss and profit targets along the way. And as you get close to your profit target, you can start taking your profits along the way, so that you don't have to wait specifically for that level. As you get close to that level, you're taking profit targets, and you're taking some of your trade-offs and allowing the rest to run. Focusing on the fundamentals of the trade is vital. Try to avoid trading based on what you think should happen. Instead, focus on what's actually happening. The trend is your friend. Follow the stock market and the stock, and when the stock is moving higher, take the stock for a long position, along with the trend of the overall market. Don't try to fight the trend. Lastly, one of the common mistakes that I see all the time is traders averaging down. It results in a loss, and it's also twice as big. That's why we have stop losses when the stock goes against you. I want you to get out of the stock and not start thinking it's going to turn around. In this final section, we're going to talk about how to deal with losses. Trading is all about the probabilities out there. You have to accept that your strategy is profitable based on the average of all trades taken, not just one. Over time, as you look at your trading throughout the month, we can see the overall theme of our month. Was it a profitable or a losing one? It is common we have some bumps and losses along the way, but overall, when we have a green month, a green week, or a green day, we can't forget that we've had some red days or red times in that month. However, we measure ourselves monthly and make the conclusions from there. Secondly, remember that learning never ends. It's just like being a doctor. It's an ongoing process that never stops. Learning each and every day, you can pick up something from the Wall Street Journal, from television, from the trading room, and all of these things will add up, resulting in you being a better trader. Know your loss limits and be cautious to not exceed those. Also, there's a strategy called sitting on your hands, which is one of the best ways to avoid a loss. Remember, traders, you can go longer stock, you can go short on a stock, and you can sit on your hands and avoid the stock altogether. That's one sure way to deal with losses over time if you find yourself in that rut. If you find yourself overtrading or trading with a loss, sit on your hands, take a breath, step away, and just look at the market and understand where you've been. Looking at your journal, looking at your trades, and being able to learn from what you have been doing recently. Losses are part of the package. It's part of paying your dues to becoming a successful day trader. I would like to thank you for joining me during this lesson, and I look forward to seeing you in the next one.